Welcome back to the channel. I hope you're having a fantastic weekend wherever you are around this beautiful planet of ours. And if you want to make it a little more spicy, smash up the like button, subscribe, bell notification icon, and click all so you let YouTube know you want to see more of this content, because the traps and the downside targets are starting to play out. If you haven't been following along, each of these videos builds upon one another. And just in the last week, we've been going from the dollar collapsing and obviously finding those support levels to the pattern on the stocks and Bitcoin breaking out of the bear market. Each of these has led on to what we're looking at today at the end of the week. So it's end of week, markets have closed. Let's take a look at the S&P and follow on to the Nasdaq, the dollar, and Bitcoin. So there's two major things I want to look at today. It's obviously the trap and then the downside targets if we break these lows that we've just set on the stock markets. Now, if we break these lows, there's obviously further downside, and I don't want to get caught with my pants down with these downside targets, all right? And this is something specific that we covered in the October predictions video. So we look at the macro and then follow up day to day just to see how that planning and that analysis is going day to day. All right. So first things first, today, the market has fallen quite significantly, 2.8% compared to yesterday or the day before's close. People are relating this to the Fed potentially delivering bigger rate hikes as the job market fails to cool. So there's a lot more jobs coming in, and this is not helping with inflation. But what I see here is that they've got a 92% chance that the Fed will raise its policy rate. So it's currently at 3, you go to 3.25, thereabouts. And the meeting is on around the 1st to the 2nd of November. Now, this all seems like massive news. It's going to happen again, more point rate hikes, etc. 92%, that's up from 85%. So we have to sort of start to piece these things together and pull it apart at the same time. They're already expecting, or markets are expecting, an 85% chance that we would see a increase in the rates. Now it's jumped to a 92% chance. So 85 in 100% chance to a 92 in 100% chance. I mean, either or, most people would think that we're going to see another interest rate hike. That leads me on to the drop here. And if the markets are anticipating an interest rate hike, the majority of people, regardless of what's just been announced with the jobs themselves, it hasn't really affected what the chances are of a rate hike, which then means anything that we see to the downside may be an overreaction because we're basically expecting a rate hike anyway. It's only just increased slightly. Are you following? That's what I'm seeing. This then relates back to our October prediction video, where we're potentially looking for a bit more of a downside in October. Maybe it was the 30th of September. Maybe that was the low for Bitcoin. Of course, we've seen lower prices on the S&P. So we got that on the 30th of September as well. So maybe we'll see slightly lower prices, and I'll get to those in just a moment. But the later half of October, potentially expecting some upside, which then leads into November and December, which is potentially more upside as well. So I've laid all that out in this October video. I do this once a month, going through the predictions for the month, and then we can reflect on that at the beginning of the following month so that we can see if we are on track. The big thing here, the traps, we were waiting and watching the double bottom come in on the S&P. We're watching it on the Nasdaq, and there was one on Bitcoin. I don't think it's as strong, but this is what we're looking at here. So we saw the double bottom. We got that bounce away quite quickly, gap up. That's what's formed here. This was on the 4th, 5th, 6th, and now on the 7th, we got a gap down. That's this little yellow rectangle in the middle here, which then forms a pattern, an island reversal pattern. I'll get to that in just a moment. But we were watching and waiting for the 50% level of the range, so bottom to top, at around 3,800 points. And this goes across for the Nasdaq and for Bitcoin as well. So it's the same thing that we're looking for, but we'll have different prices, of course, that we have to look out for. So the caution level, the trap, which was in this particular video here, caution Bitcoin stocks just flash buy, and then we were looking for that trap. That was around that 3,900, 4,000 level for a round number, and that was still beneath the bear market, which was up here, this yellow line, and then the recent downtrend as well for the S&P. So we've just had that drop down. We've got an island reversal pattern. An island reversal pattern is well, like it says, it's a reversal, but it's a reversal in the direction of the downtrend, basically where that gap was just left. So we got a gap to the upside. We had an island up here. That's why it's called an island reversal. So this works on bars or candles, so you can just see it a little bit easier. But there has to be a gap between the top of the bar and any part of the island in terms of price. And at the moment we have a 16-point gap. This is a reversal pattern. Generally it goes down. It doesn't have to. Maybe we get a few bars here or candles where it holds out and starts to work its way higher. If it closes the gap over the coming days, essentially have a couple more here and it closes this gap, then the pattern is off. We don't have that anymore. But should this continue on, then that's a much stronger pattern to break the level and then come back down to test our next levels. So the 3,200 points lines up pretty nicely with these previous lows that were set in 2020. So you can see there 32.25. And that basically just leans us towards a balancing market. So it's still nothing to be overly concerned about. We need to have pullbacks. We need to have sell-offs, profit taking, and for the market to then rebuild in order to get that move back higher. So nothing is really changing at this point. It's still within reason, within the patterns. But overall, we're just waiting to see what happens on Monday. And basically, to the downside, we're still happy anything above 32 to 3,500. And to the upside, sure, we break 38, 3,900 points. It's also looking pretty sweet as well. Now for the Nasdaq, pretty similar to what we just looked at in the S&P. This is the daily chart. We'll also look at the weekly quickly. There was also an island reversal pattern on the Nasdaq right here. You can see the market jumped over those couple of days. Now this pattern refers to the bars or the candles that are in this current action that forms a pattern. So we don't look back to this area here. You've got the 3rd, 4th, 5th, 6th, and the 7th that form that little gap here. So you can see that the market didn't make it all the way to the low of the 30th of September, which is the current low on the Nasdaq as well. You know, the current cycle low at this point. I think with this sort of weakness here, should we get that little close under, so 10,960 odd, then 10,600 is not far off, and we're kind of expecting somewhere around that area to be a final support. So if the market starts to freak out with this Fed news and then eventually finds its legs, finds its ground a little bit lower and comes back above this 10,900, call it 11,000 for a round number, you can basically say that that was a bit of a fake out to the downside, caught the last of the stops that are underneath this level and then closes back higher. So in the short term, yes, weakness. We've formed an island reversal pattern, 16-point gap here. Market is closing lower. On the weekly, we are basically all the way back down to the low, and it did just close almost dead on the low of that bar. So 11,037 points, and the close this week was 11,039 points. So just 2 points above that low, basically dead on that. So the market is really waiting to see what happens on Monday, which is why we're prepared for the downside and the upside as per usual. But the hopium here is that anything really to the downside is still within reason of a normal correction, a normal bear market, and not a depression or recession or multi-year bear market or any of this other sort of nonsense jargon that we're coming across out there. And the reason why that's so important is that if we do start to fall into that trap of thinking that there is, or thinking it or feeling it, but not actually looking at the data on the charts, we think that there's going to be some worse depression out there, then that can prevent us from basically filling up our bags at lower prices and then missing out on the next run. So that's the sort of thing you got to weigh up for your own portfolios. And that's why I have these sort of levels on the chart to identify the macro support and the macro weakness rather than listening to what's going on out there in the news headlines. Now for the dollar index, this week we closed a little high, still beneath the previous weekly candle body and the week prior to that close. But at least it's a little bit higher close than the previous week's close. That was a bit of a mouthful there. Going to the daily chart, we got a bounce off that level there. So this was the day we looked at the collapsing of the US dollar. That was around this low, and we had a bounce. All right, so the downside is still bigger than anything we've seen recently. But if we take a measure of this previous move right here. There's a lot of days in it, but the measure is about 4.6 points here. Did we manage to reach that now? We're at 4.7, so slightly longer, just slightly in the downside, but almost balanced here. So what that's telling me is that the market is really trying to decide now whether we keep going up at the same rate or come back down. And that sounds like an if then or buts scenario. But before, we were only seeing short pullbacks, short corrections, and the market was able to go up. Whereas now it's starting to question itself whether it is still time to keep going up. The positive or the bullish sign here is that we got a 50% level and the market has closed above that 50% level, but it could still be running out of steam. So what you want to look out for in terms of the chart and not the news headlines is any sort of close above 114.8. So you can see the high at the moment is 0.778, which leads us over to the analysis on Bitcoin. All right, so we got the end of week close for the futures contract here. We're still above the bear market downtrend, which we have broken this week. Now I've got it on a 4-hour chart here just to show a 50% rejection, but that's the all-time high. The next top, we got the rejection in September. The market also tried twice more, late September and then early October, late September again, before it broke out this week. Now, there's a lot of people still calling for $10,000 Bitcoin, etc. I don't know if the market will get there. I don't think we're going to get to any sort of 10K level. Potentially somewhere down the 12s, 14s, 16s. But for now, it's still above the bear market downtrend. It is looking slightly weak here with the weaker close on the daily, the weaker close on the weekly chart as well. And we're just managing to hold slightly above the current low of about $18,000. This is on the futures contract. If I go back to the 4-hour chart, this is a pretty good little setup here. A 4-hour double top, and then the market plays out to the downside. And it got rejected at the 50% level of the daily. So we're looking at the 4-hour here. We've got the daily 50% level and a rejection at 50%. This is how powerful these tools are. And then if you can use that to your advantage to take a trade, you've got huge reward to the downside and very, very small risk to the upside. You can place your stops just above these levels because if it does break it, you know it's going to go a lot higher because 50% are extremely strong magnetic points, whether it's the up or the down, just using it as a support resistance flip. So that tells me that we've got maybe a little bit left in this shorter term move, potentially down to about 18 and a half. But then we'll have to wait and see what happens from that point. You can also see there are some support levels back down at 18 and 18 and a half. Now to the daily chart, a little more action here that we can focus on for the trap, the three-way trap that we're looking at here. We've got the trap on the S&Ps and the Nasdaq, obviously the stock market. You've got the dollar trying to regain strength, and then Bitcoin just starting to pull back again after it broke out of the bear market. Now, we've had this for weeks, maybe even months here. $20,700. We've referred to this a lot. Unless the market breaks above this level, I still see it as a trap. So although we broke out of the bear market, that's our first attempt. We might have to take another couple, which we've covered before, reasons why. We're coming back down to test the top side of it, which is not too bad. So it's this kind of three-way mishmash of the S&P going lower, getting very close to those lows. The same with the Nasdaq, the recent lows. The dollar finding some strength again in the short term, even though it's not back near these tops, which is then obviously causing a little bit of downside to commodities like BTC. But BTC is holding its ground, even though it has cooled off a little bit. It's not cooling off as much as what we would have seen in the past should these events have come to fruition. You know, if the dollar had kept going up, we'd probably see a lot more of a dump on Bitcoin. But it is holding just, at least it was at the close of the week, which I think is a little more important. You can see it closed at about 19,500, which has been a pretty significant level over the last month and a half. Now, with Bitcoin down at these lower levels, it does put it back into the cycle buy zone. So that's just under anything under 19,600. Play your cards accordingly. We're back in this zone. The swings are down, lower highs, lower lows on the weekly chart for now. You can go back, check out these videos. You'll see some other videos popping up on the side here shortly to look at trading and investing plans that I've got here on the channel. So make sure you watch those. And of course, subscribe to the free newsletter coming out in a few days' time. This is in the top of the video description. They are the support levels that I'm watching for beneath the market. I'm still in the mindset of October playing out as I'd expected here on this video. So make sure you go and check those out that are popping up shortly. Other than that, I'll see you back here on Monday. Have a fantastic weekend. Like, subscribe, all that stuff. Until then, peace out.